This is Al Brooks, and this is material based on my Brooks trading course. Today's blog is on channels, and today is Friday, December 28th, 2012. I'm going to be talking about only a single slide today, and there is a bear channel on the slide and a bull channel on the slide, and they share something in common. Both have 4 pushes, and channels with 4 pushes often lead to reversals. The market sold off with maybe a 10-bar bear micro channel down to bar number 1, and that's unlikely to lead to a major reversal. So if you bought the bull II here, you have to be going only for a scalp. There was then a triangle with this high, and that high, or you can call it simply a double top bear flag. At this point, a bull body, not a strong short. To me, I would only take that for a scalp, or I would wait. Whenever you have a low 2 forming in a trend that has gone on for 10 or 20 bars, you have to be thinking about the possibility that it is a final flag. So if you take this, it's probably better just to take it as a scalp. A very big bear bar, but very little follow through. So we might be forming a trending trading range. We have an upper range, a breakout, and then a sideways move here, the start of a lower range. So this might be the final flag. So that short is a scalp. Bar 3, a doji inside bar, not a strong signal bar for a reversal after such a strong bear trend. So if you take that, it would be only a scalp as well. Wedge bear flag, 3 pushes up. You can argue it went up on this bar and then up again, and then down, and then up here. We may get a third push down, and this might be a spike in channel pattern. Again, you could take this, I think, probably better for a scalp. Bar 3, at this point, we have 3 pushes down over here, and then second push and a third push. But why does the signal bar look that way? Why is it a weak bar like that? A small bar, a doji bar, that is not enough to overcome these 4 bear bars. It's possible that this is a sell climax and that this turns out to be the low of the day, but that is not a strong buy signal. So if you're taking a low probability buy, you have to be taking that for a swing. In general, I would not take that trade. I would wait to see if we get a strong bull breakout, and then either buy the breakout or wait to buy the pullback. It failed within a couple of bars. You could take this short, or you could think, we've had 3 pushes down in a channel. It may form a 4th push down, in other words, a high 4 buy, and channels often end with 4 pushes. So in this case, it did, right? So a lot of times you get a 1 push, 2 push, you have a high 2, then you get a breakout and 2 more pushes. So a lot of times it takes the shape of a high 2, and then a breakout, and then another high 2, creating the high 4. So anyway, we got a bull body, at least, not a very big bar, but because it's a high 4 in a channel, I don't have support levels drawn in here, but it is in the area of support. Anyway, a high 4 in a channel always makes me interested in buying, especially with a bull body. However, whenever you buy a high 4, you have to be aware that sometimes after it triggers, the market falls below the bottom of the signal bar and then quickly reverses up. Up here, we had 4 pushes up, and the low 4 triggered. It went above and then came down again. So a lot of times, high 4 and low 4 entries have one more small push, and then the market goes your way. So anyway, I think you could buy above this bar. You could buy below that bar, betting that even if we fall below 4, we'll probably find buyers and reverse up. Is this a swing or a scalp? To me, I think we'll probably test this high. We might get up to that high. However, usually you get 2 legs and 10 bars in your direction. So after the high 4 triggers, I'm looking for at least 10 bars up and at least 2 legs up. We rallied up. We had 7 consecutive bull bodies, very good for the bull case, and we broke above the trend line. So to me, I think the easiest trade is to look for a major trend reversal, a higher low or a lower low. Moving average gap bar, you could take that short, thinking that it's the final leg of the bear, or you can say, well, 7 consecutive bull bars, a high 4 in a channel, we should get a second leg up. Instead of taking the short, I'll wait to see if we get a buy. And I think that's a reasonable thing to do. This is not a strong short despite the moving average gap bar. The market had tried to get a small double bottom here, but with that spike, I thought there was a risk of 3 pushes down, which we got here. You could buy this. We have a small spike and 3 pushes down, spike and channel. Higher low, major trend reversal. Okay, this low is above that low. It's a breakout test of the 4 high. Not a very strong signal bar, but I do think it is an okay buy. How do you manage it? If you buy it, you could buy it and exit below this bar. You could exit below here and then re-enter over here. Or you could just buy and use a wide stop. What's a wide stop? 5 or 6 points. And I think that is reasonable. You would never be buying with the intention of risking 5 to 6 points. That is your catastrophic stop. Chances are, if the market failed to go up and it started to go down, let's say it formed a low 2 short here, you would get out once the low 2 triggered, and you would not rely on your 5-point stop. But it is reasonable to use an initial catastrophic stop, a very wide stop. All right, so let's say instead you bought here, you exited here, and then you see this, a 2-bar reversal and a second entry on the higher low major trend reversal. Very often higher low major trend reversals form with double bottoms, and this would be possible. I think that would be a reasonable swing long. Would I scalp it? Probably not, because we're in a tight trading range, and probability is too low to take a scalp. Strong bull breakout, 1 push up, 2 pushes up, 3 pushes up, 4 pushes up, and we have a spike in a channel with 4 pushes, so a possible high leading to 2 legs and 10 bars sideways to down. Turns out the next day gapped way down here, but I would not have held this overnight. I do think this is a reasonable short, but the same thing holds as buying over here. Whenever you sell a low 4 or buy a high 4, you have to be aware the market may have one more small push up, as it often does. This is an extremely tight channel, and this move up is much stronger than this move down. So there's a greater risk of a one more push up. So what do you do if you sold here? You could get out above here. You could get out above here and take your loss, or you could use a wide stop, maybe a 5-point stop up here somewhere, and hold despite the move above the signal bar. In any case, if you did get out, you could re-enter below the micro double top, up here and then up here. Not a strong signal bar, plus just 3 bars left in the day. So it's okay not to take this short. It's also okay not to take this short below this bear bar as well, on the theory that the channel up is very, very tight and we're running out of time on the day and we may just go sideways into the close. The point again is, if you have a channel with 4 pushes, you have to be aware that it often leads to a reversal with 2 legs. And here we have 4 pushes down in a bear channel, and we got 2 legs up. First one here, and then the second one, a major trend reversal. Here we have 4 pushes up in a bull channel and a low 4 sell, but we're running out of time on the day, so it's unlikely. Well, you cannot get 10 bars sideways to down. There are not 10 bars left, but you might be able to get a quick sell-off down for a scalp. Easiest trade, whenever I see a bear trend, I'm always looking for a break of the trend line, preferably with a gap bar, because gap bars usually lead to the final leg of the bear. and then I look for a major trend reversal, either here or here. And a lot of times when I take major trend reversal buys inside of trading ranges, I do use catastrophic wide stops. Here, if I used the catastrophic stop and I bought here and then I got this bear bar, I might get out right here and then look for the second entry, which was right here. And that is the end of my talk today about channels that form low 4 and high 4 patterns. Thank you.